Hello, everyone, and thank you also from me for listening in today about some basics about the value-added tax that is a must to know when you trade internationally, since almost every country in the world do have a VAT system as opposed to the United States and a few other countries. So what I would like to do today is to give you a general overview how about VAT works. It is a very, very complicated tax for sure. So please, one of the messages we'll send home is that if you have an international situation, please take in advice about that particular situation because it can really vary from case to case, country to country, even though the general rules are basic and the same. So what we like to do today is just a general introduction of your VAT Refund, our company. We also explain to you what a value-added tax is. You from the United States, you are used to sales tax. VAT is quite different. You listening in from Canada, the VAT, of course, is the same as your GST tax in Canada, so you will be more familiar. When will a North American company experience that? Tell you some situations. And when is VAT registration required? Sometimes when you do trade internationally, you do have to register for this tax. How the VAT works, some calculation samples. And then today we're also focusing most on e-commerce and sales of digital services. So e-commerce, of course, is when you sell from your website, taking orders mostly from private people, but also from companies it can be. And you can then store these goods in US and ship, or perhaps in these countries and ship from there. And also digital services that most are not aware. When you do sell digital services such as online games, streaming, software, everything like that through your own website, that is also subject to VAT in some countries. And how to be VAT smart, and then some questions and answers. So Eurovat Refund, we were founded in 1992. We are located in the Los Angeles area, but we have clients all over North America, mostly US and Canada. And we do have expertise in all kind of VAT issues, in particular when it pertains to the European Union and also Australia, since these are countries where you can register for VAT only when you trade. You don't have to establish a company there, not always at least. So that means that VAT reclaim, and you should think like we do, that that should never, ever, ever be a cost to a company. It is really, in the end, only a cost to the private person in the end. So that is something to keep in mind, that these VAT should not end up as a cost to you. We do the VAT consulting too, when it relates to e-commerce, conferences, drop shipping, all kind of things. So VAT, what is this? Well, we're going to show you some samples, but just for you from United States who might think about the sales tax. How a sales tax works in the United States, as you know, is that the rules vary a little bit from state to state, but they are basically the same. A company in US, when they buy products, they don't have to pay any sales tax on things that they are going to resell. For example, a computer company buying computer parts that they will resell, no sales tax. Also, when you buy services like your accountant, your law firm, and marketing services and so on, no sales tax on that either. What you do pay sales tax of is when you buy products that you will use in the company. For example, when you buy your office supply and office furniture and so forth. And when you have to pay it, it is a cost to you. You cannot claim it back. It ends up as a cost. When you sell, then you basically have to charge sales tax if you do not sell to a reseller, which means somebody had a resale certificate and they will sell on your products. And when you do a tax return here, report your sales tax, you report into your state franchise tax board how much sales tax you have collected. And you do report your sales. If you have not collected, you have to have backup. You cannot deduct any sales tax that you have paid. You cannot. A VAT, on the other hand, that is implemented in all these countries around the world, means that the same company, for example, a computer company in England or Canada, when they purchase things, they pay VAT on absolutely everything. They pay VAT on things they're going to use themselves, on products they're going to resell, on all the services like the lawyer and the accountant and the marketing firm have to charge them VAT. So almost everything they pay VAT on. And when they sell within their own country, for example, Canada sells within Canada, United Kingdom sells to UK companies, they charge VAT to everyone. It doesn't matter who the customer is, they charge VAT. And in the end of the month, what they do is they do a VAT return to the country. And in that VAT return, they report all the VAT that they have charged to their customer. And against that, they can deduct all the VAT that they have paid out to all their vendors. And the difference they pay into the tax authorities, or they get a refund if they have that month paid out more VAT than they took in. So the VAT, the basics there is that it is applied to everything. You charge it to everyone, basically, within your own country. But the big difference also is that the VAT that you have to pay out is deductible, refundable if you are a company. So that never is a cost, ever is a cost to these companies. It's accounted for in a balance account, and that is a big difference from the US. So VAT then implemented in almost every country in the world is called different things. VAT, it is called in UK and several other countries. GST, Canada, Australia. MWST, Austria, Germany. TVA in France. IVA in Italy. JCT in Japan, for example. The rates are usually 8 to 27%. In Europe, the VAT rates are 17 to 27%. So if you do not know, if you start to trade in Europe and then is not aware of this, and you do not plan ahead, this can end up as a cost to you. You can get an extra cost of 17 to 27% that you will incur if you don't plan ahead. So you set it up so that you are in compliance and can legally reclaim it. So think about that. If you don't look at the rules, learn it, you are not in compliance, which is not good. But in addition, you will end up at 7 to 27% extra cost. So the US company, or North American company, when will you experience that? For example, if you trade in Europe. Well, one thing is when you sell goods and services online within the EU, e-commerce, electronic supplied services, that is one situation. Startup cost, if you want to start to sell in Europe and you go there for, travel, trade shows, conferences, that is another situation where you will have to pay VAT on all those costs. And that would you like to get back. If you import and drop ship goods, so that means that, if you sell from North America to Europe or any foreign country, it is generally a lot better that you let the customer take care of the imports. So they will be responsible for the duty and VAT. That is the best usually and normal to do. But there are situations when this is not possible. For example, if you want to sell on Amazon's websites in Europe, or if you need to import and store goods in Europe first. For example, you want to be closer to your customer, for example. So you say, I want to put a warehouse in Netherlands, for example, and ship from there. Or you are drop shipping products. That means that you have a situation where you purchase products from Europe, maybe from England, and you sell them to Germany. In those situations, you are trading within the European Union, and that is what often you experience that on that too. And also, Australia I want to bring in here. So, for example, if you are shipping to private people in Australia from US, now there's a new rule that say that if you are over a certain amount, even if you ship from North America directly to a private person in Australia, they are supposed to take care of the import. Australia has not changed that. So if you are over a certain amount, then that's not possible. Australia require you to be registered for GST and take care of that part in Australia. Also, I know we have some event planners on the call, and another where you will incur this is if you organize conferences and events in Europe, Australia, and so forth. In the other countries, this is also an issue, but again, remember, for example, if you do something in India or China or South Africa or Argentina or Chile, they also have that. those countries you cannot really register for VAT only. So if you do something there, please look into that before you do it, because it might require you to open up a company there if you are trading within those countries. And again, emphasize, ask for advice before you start to trade. The European Union, here is a map of the European Union countries. Right now they are 28, but as most of you probably heard, the United Kingdom is supposed to exit EU like next year, and they are still working on all the details how that would work. VAT we don't know so much about, but it will change, we know that. When you look at this map of the European Union, keep in mind that most European countries are members of the European Union, but not all. For example, there's a little white spot next to France, that is Switzerland. They are not part of the EU. Up north, west of Sweden, you have Norway. They're also not part of the European Union. They do have that, but they're not part of the European Union. When you look at this map of European Union in terms of trade, you can think about that as the United States. Each of these member states are like a state in the United States when it comes to trade. If you ship something from China or United States or Canada into Europe, you can import it into any country. For example, you import something into Germany as the first destination. That means you pay duty to the German customs and also VAT, and now it is for trade within the European Union. You can now ship around and sell it within these 28 countries. It's not an export anymore or import. You don't have to pay any import fees or duties anymore, but you have to consider the VAT rules. So that is the same as United States, you can say. You can import to China to, for example, Atlanta or New York. The product is now within the United States. And now when you can sell it around the United States freely, but you have to look at the different sale tax rules in our states. And as you know, they can differ also. So it's kind of the same thing here. The EU VAT rules are basically the same. They are decided by the European Commission that gives out the rules to 80%, I would say. And to 20%, 15-20%, the countries can implement their own rules. So the basics for the rules, they are the same, but they can also vary, just like in the United States with our sales tax. Also keep in mind that these countries compare notes all the time. So for example, if a French company sells to a German company, the French company can get audited by the French tax authorities. They can see that it's a sale to a German company. The French tax authorities will contact the German tax authorities and they will ask, does your German company have the same reporting on their end? And the German company will be audited and they make sure that what France has reported is the same as Germany has reported. So they do compare notes all the time, and it's extremely important to keep track of your products moving around in Europe and report all of these transactions. If you sell or just ship them for other reason, same thing. So VAT registration for US company in the EU countries, what does that mean? Well, as I mentioned, is that if you are doing certain kind of trade, for example, only shipping around products and selling them, or some services, and you do not have any employees or any office in Europe, then usually it is possible to register for VAT only. You do not have to have an establishment or a subsidiary. That is usually the case. And that is a great advantage, actually, because that is not really possible in most other countries. For example, a German company who would come into the US cannot register for sales tax only. They would have to have an establishment here in order to sell. So that is a great advantage for the European Union, that they will allow the American company to register for this VAT only. And this is something then that is required, for example, if you, as I said, import or warehouse goods in Europe, your own warehouse or e-commerce. So, for example, if you are a medical clinic company and you have to be close to your customers that are hospitals and clinics, you might want to have a warehouse in Netherlands, for example, and sell from there. That's an example. Or if you do e-commerce, so you want to sell through Amazon.uk, for example, you put it in the fulfillment warehouse in UK, that also requires you to be registered for that. US company that dropship goods, buy and sell from these countries. And also, again, sales of online digital services to private person or non-registered entities. That requires registration. This is if you do not sell through an app store. So if you sell digital service directly from your website to private people in Europe, for example, they can download software from you, streaming services, online games and so forth, music, then you are required to register that too. If you sell to businesses, not required, but to private people it is. Finally, if you organize an event or conference where attendee fee will be charged, then also this requires VAT registration in these countries and also in Australia. So again, how that works, as I said, when you are, for example, in the United Kingdom, you have to collect that on all your sales invoices to the United Kingdom. If you sell marketing services, law services, accounting services, computers, whatever you sell, you have to charge that. You also pay that on all your purchase invoices that come to your office, and you declare the difference to the tax authorities, and you have to pay in the difference, or if you have paid out more than you took in that, they give you a refund. And that is then accounted for the balance account, and in the day, it is not a cost to you, as opposed to, again, the American sales tax that does become a cost to your company when you have to pay it. So what does this look like? Well, look at this. This is what it looks like when you ship goods to any of these VAT countries around the world. It works the same. You ship something, so you have to prepare a commercial invoice with the value of the goods. So in this sample, we said 100,000 euro. When it comes to customs, for example, in Germany, then everyone expects that you have to pay duty, maybe 3 to 5%. So in this case, we say 3%. Everybody kind of knows that customs is due. That's very general knowledge, and nobody is surprised. So now you have a new subtotal here of 103,000. Now what comes to a surprise for many in United States is that customs in Germany, in addition to add on the duty, they will also add on VAT, and that is in this case 19%. So in addition to the 3,000, this company also have to pay 19,570 to the German customs in VAT. That is a big cost, and if you're not prepared for that, that becomes a very unpleasant surprise. And if you're not set up to handle this before you ship, it can also end up as a cost to you in many cases, which is not refundable. So that is something you have to be prepared for as soon as you start to export to any country in the world, basically, because most of them have VAT. So how this works is that if you sell from the US or Canada into Germany, for example, if you let your customer be the importer, so you say that, I put it on the ship, you are responsible for the import, that is okay, because if your customer is a company, they are already registered for that in Germany. And they know that, okay, so when I import this, I will have to pay customs and also VAT. They know that, they set up. So what they do is they pay out the VAT and customs, they go home, and in the next VAT return to Germany, they file, and Germany will refund the 19,000 to them. But on the other hand, if you have committed to be the importer record, for example, you're going to ship into the Amazon fulfillment warehouse, or you have your own warehouse or products in Europe, then you will end up with this VAT charge. And now you wanted to get it back, of course. So that means that you have now to be registered for that in this country. Now we're talking Germany. Before you ship, they will import under your VAT number, your name. You will have to pay out the 19,000, but you can now claim it back. So this is really important to understand when you start to trade and ship to all these countries. This is what happens at customs. In addition to customs, they will charge the VAT. It's a big expense. Make sure you are prepared and know how to handle it from the start, so it does not become a cost to you or your company customer in Europe. Do note that if this is a sale to a private person in these countries, the private person will end up with it as a tax. They will not get it back. If you're purchasing something from Europe, for example, you purchase something from Germany and they will charge you staying in Germany, then what they do is they have a net price, 19% VAT, in this case 1900. You have to pay them 11,900. So now in the booking for the German company that buys something, they book their cost as 10,000. The VAT of 1900 goes into a balance account. It's not a cost. So that's how they see their accounting. Of course, the US, if you have to pay sales tax here, you would book 11,900 as the cost. But that's not what you should do when you deal with the VAT. The VAT goes into balance account, should be refundable if you are planning ahead correctly first. Again, though, I want to emphasize when you sell to a private person, they cannot get it back. All companies can get it back, but private people cannot. To them, it ends up as a cost. So when you sell then to Germany, again, from Germany, you charge, for example, if 150,000, you charge for freights, in this case, 1,000. The net price is 151,000. You now add on 19% VAT, and you collect 179,000. Again, you book 150,000 plus 1,000 is your income revenue here, and your customer, of course, also book that as their cost, and the VAT you both book on your balance account. So VAT declaration to the tax authorities, that is done monthly or quarterly, depending on the country. You said, I have collected this much VAT from my German customers. Remember, you charge VAT to all of them. So that is 28,000 euro in this case. You have paid out to the German vendors, in this case 1,900. You paid VAT upon the import for 19,000. So in this particular case, you owe the German tax authorities 7,200. You pay that in, and your balance account is zero for VAT again. So VAT on e-commerce. Let's go in and talk about this a little bit more again. This is a new area, and you know that e-commerce is kind of complicated here because all of a sudden you have very small companies dealing with the whole world as the market from day one. It used to be that international trade didn't happen until you start to sell on your local market, then maybe your state, and then US. And by the time you were ready to sell internationally, you already had quite a lot of accounting experts on file, maybe a lawyer. But many of these companies with e-commerce, they are really small and they hardly have an accountant. And all of a sudden, they are trading all over the world with their products. And it really requires them to know how it works in all these countries. So it is a tremendous burden. So you can say that how all these trade rules, it's not only about VAT, of course, it's about customs and so forth. It's not set up for today's market of small companies trading internationally from day one. So it is complicated and of course stops some trade too because it does get so complicated. But if you take this e-commerce company now, so a typical e-commerce company from North America, for example, Canada, US, they can either have a warehouse in the United States and they take orders from United States and everywhere and they ship everything from this warehouse in the United States. So this is my first example. So that means that you have mostly private people ordering from you and you do know that, okay, my prices really are within the US. I do not want to pay for duty and VAT. So then you have an issue how you're going to get that to work. First of all, you have to be extremely clear on your website when you get orders to your customers that if you take international orders, you have to be very clear on that either they have to pay the import duty and that when it gets to the country, or that you add on 30% to cover that part. That has to be very clear, first of all. And when you ship to private people, for example, in Europe, they don't like to go to the post office and have to pay out more money for things that they bought. Even that, though you did tell them that, they still don't like it. They didn't get it. So that is not so good for them sometimes. So then you might choose to take on that part for them and then you ship to them directly. Again, remember now that the VAT is refundable if you have a company customer, but not to a private person. But if you do that, you have to make sure that you work with a logistic firm that can handle this. For example, if you ship by the postal service, so that means you mail something to your customer, then they have to be the one who pays for the import duty usually, because most mail offices all over the world they only do it. They got a package. It is designated for a private person in the country. That private person has to come and pay duty and VAT to the post office. There's just no other system in place. But if, on the other hand, you ship with a carrier such as UPS or FedEx, they have an excellent service where they can pay the import fees to the customs and then invoice it on. That is cases where it is possible for you as the merchant to take on the cost and then invoice on to your customer. So you have to look at the whole logistic picture and who you send the carrier with in that case to be prepared. Next one is e-commerce goods shipped from an EU warehouse. Most typical people are using Amazon fulfillment warehouses in Europe. So that means that you as the merchant in North America, you have to ship in products and put them in the warehouses of Amazon in Europe, for example, UK, Germany. And then you take orders on the Amazon European websites, and Amazon ships from these fulfillment warehouses to the customers. That means that you have to register for that in each country where you have products in the warehouse. So for Amazon, for example, it is absolutely better to start with one warehouse only. I would say today, the United Kingdom, before they leave the Brexit, that is the easiest country to work with. If you also put your products in fulfillment warehouses in Germany and Italy and Spain, you have to register for that in these countries as well. That gets really expensive and really complicated. Amazon usually ask company to or offer them to go on their pan-European sales system, which means that they will put your products in different warehouses. You have to be really, really careful with that because that it creates so much cost for you, so much headaches. So generally speaking, start with one country only. Then when you become very successful, consider to open up also in another warehouse. You can, even if you are registered for that in one country only, for example, the United Kingdom, and you have all your products there, you can still have Amazon ship all over Europe from there. So you register for that in the United Kingdom. You now have to import your products to UK and you pay duty and VAT to customs. You must charge that to the customer per the EU laws. And that's what you do. So now you have to think about another thing is that in Europe, when you sell to private people, then it is usually required by law and customary that you show the prices, including VAT. You know, in US, you never do that. You go to a store, buy some clothing, they state the price. You know when you check out that they're going to add on sale tax in many cases. That's not how it works in Europe. When you sell to private people there, for example, you go into a store, the price on the clothing includes the 20% VAT. Also on all websites that are designated for private people in Europe, such as Amazon, the prices already includes that, and they must do so. So when you are free to go in and state your price on the Amazon website, if you want to get $100 for a product, you have to state 120. So that means that the customer pays 120 to Amazon. They will send all that money to you, and you now have 100 for yourself, and 20 is VAT. So these are very, very important things. So as soon as you show your products on any websites in Europe, they have to include VAT. So make sure you understand that, and make sure you are set up for VAT accordingly. sale on electronically supplied services to private person in the EU from the North America or anywhere. This is also not so well known as the European would like it to be. So we know that many companies don't do this, mostly because they just don't know. But of course, some of them try to get away with it too, and which is not so smart because now the EU is really, really hunting down the companies in Europe. They have many people at the tax authorities who just try to find as many as possible. And also the competitors you have in Europe, they also are happy to report you as well if they see that you are selling into the EU without charging VAT. Also, I want to point out that this is very important because we are often contacted, Eurovat, from like a lawyer or something who's trying to set up the company they have for to go public, or they want to sell the company. And then in the due diligence, they notice that this company have sold electronically supplied services to private people in Europe for many years without charging VAT, and that it becomes a big liability. So for many reasons, it's important to know this and do it correctly. So then again, if you sell anything from your own website, so the private person can go on your website and download and buy, for example, cloud services, software, online games, music, broadcast, and so forth. Then you, as the North American company, is required to register for that in one EU country. For example, you pick Ireland. You then have to charge that to the different countries, private people. So that means that you are registered now in one country only, for example, Ireland. When you get an order in from a private person in Europe, you have to know, is this person in Sweden, France, Hungary, where? And you have to charge that according to that rate. So you need to track, I now have a private person from Sweden, I need to charge 25% VAT. Or I have a private person from France, I have to charge 20% VAT. Or I get an order from a company in Germany, then I do not have to charge that, but I need backup. So your system need to track this, and the way that that is tracked is that different ways. For example, they can track what credit card the country is that they buy from, and also if you order by phone, they can track the country code on your phone, and there or an IP address, for example. So that is kind of complicated too, because people in Europe, they travel around a lot. So you can certainly have a private person living in Luxembourg who works in Belgium and has the credit card from Belgium, and this person also has the summer house in Spain. So they order something from you from Spain, an IP address in Spain. Then what do you do? So this is a lot of things to learn, but the basic is you need to register for VAT in one country. You need to set up your payment system so they can track these people and know how to charge VAT. And then you declare all this VAT to Ireland. So you declare all VAT to Ireland, and Ireland will then make sure to send this money to Sweden or Germany or France, so they get that part. So again, this is complicated to do, costly, but it is very, very important to keep in mind, because you can, of course, be found out, and also you want to be in compliance because that's your policy. But also keep in mind, if you ever want to sell your company, go public, this is important to know. So what we want to also emphasize here is that, as I said, the VAT rules are extremely complicated, very hard to keep track of. They can differ from country to country and so on and so forth. So to be that smart, that is, of course, to check on the rules before you start to do anything. That is the best way. And always try to reclaim the VAT from the EU countries where you can get it back. So try to make sure that it doesn't become a cost. And be prepared that you will get charges VAT too. It happens often, for example, that we know that companies, they really, really try on their own to do all this. So they try to register for VAT and start to charge VAT. That sometimes they can do, but most often they cannot. So that means that we get a call, 1 or 2 years later, and then it is really, really will be very, very costly to go back and try to correct everything that happened in the past. So we know that it is a cost, and it's very hard for particularly for small companies. We totally realize, but if you try on yourself, it's also very hard to figure out because it is a super difficult tax. So here is my contact information. And now we are happy to take some questions from you as well. So feel free to chat them in.